Hey guys, it's Vic Noble here with a weekly trade example for you for the week ending May the 6th of 2011, and I'm actually recording this on May the, what is it, 3rd today, I think. So what we got here is just 1 second here, is a chart of the Euro Yen 1 hour chart, and I'm just showing you a little scalp here and how you can, by identifying levels, this is a very harmonic level with Fibonacci levels. Actually, one of them is from this high all the way down to low here. We've hit the 50%, which is at the daily central pivot, and we've got these, you see these lows in here that were support before. So we should get a little bit of a reaction down in here. So I actually clicked into it here. I kind of screwed it up a little bit, to be honest with you, but I got in here at about 50. So I got a 25 pip risk in it, and which just puts it just above this pivot level in here. And we'll see, it's going against me here right now, but we'll see what happens here. Sometimes it'll just jostle around. The other thing I like right now is that we're at the close of the London stock market. So generally speaking, there's going to be a counter trend move. This is what we show in our London close trade strategy course. And this isn't an actual London close trade the way that we teach it, but you still get reactions at the London close anyway, which is another way to scalp. But anyway, we'll just see what happens here. Okay, well, it's been a while since this trade was put on in here. It's sold around 50, and it didn't go much above it. It went 7 pips above it, and it's coming off here now. Finally, we're hitting this resistance level here. So, what I'm going to do now is show you what I would look at for taking profits on the way down. So, one place I'd look at, you see where the lows were from yesterday, and how it was support, then it broke through and it became resistance. That's a good place. And if we go down to a smaller time frame, like let's go down to a 15-minute chart, get a little more clarity on this here. And I've drawn in the Fibonacci retracement levels from the low up to the high, and 38%. You can't even see it. It's right on top of the prior day's low. It's the same number, 120.05. So there's one possible place for sure. These old highs back here, that's 120.15 on the bodies of the candle there. Anywhere in there would be a good place to take a profit. Now, if you're going to treat this as a scalp, it depends how you're looking at it. If you're looking at it as a longer term play, that's different. But let's just look at it as a way to get some pips out of the market today. And I'm going to just take it off down here at just for illustration purposes here. I mean, again, everybody's going to do this a little bit differently, so don't worry about it. I'm going to just take it off at 120.20. Okay, and I'll have a limit order in for that. I've already been reducing my risk. I started off with 25 pips. I think I'm down to, I don't know, 15 pips or so of risk in it right now. Because price is moving in my direction, we're making lower lows here. You see on the 15-minute chart. That's good. That's what I want to see. So I want to get my risk out of this trade. And as soon as it gets going down, once I get up about 15-20 pips, I won't allow risk any kind of a loss on this trade at all. So let's see what happens. And I'll look to take profit at 120.20 just to illustrate this. And actually, I should show you the dealing stations right here. So that's what I did. I sold it and sold it at 120. I got 49.8. I said 50. It's pretty close. And then here's my limit order at 120.20. My stop rate now is at 65. So I have 15 pips of risk in here. All right, see what happens. And hey, folks, it's Vic here again. Just checking in. You can just see we just got filled in on this position. So we went short up here and filled it down here where we expected there could be some support right in here. It might go lower after this. Hard to say. Go back to the 1 hour chart. Let's just see what it was that set this trade up in the first place. Okay, because of the fact that we were at if I get the fibs on here, a big swing that had been made here, right up to this 50% retracement about 120.50, which these even numbers in the 50s tend to be popular reaction numbers, and you can see that it definitely was before. So with this move up, coming into here, right at the London close. This is really important. There's usually a reaction to the London close. If you have not seen the London close trade strategy course yet, man, take a look at it. This is very typical of what happens. And in this case, it wasn't actually a qualified London close trade the way that we show it. However, it definitely was a qualified trade in other ways. So there's lots of ways to trade it, but just I want you to know that there is generally a reaction at the London close, and that's when this was, and that was a nice little move he got. That was worth 30 pips. I sold it at 50. I covered it at 20, 30 pips, And that's why I did it, and why I covered it where I did is because of the retracement back to this level right here, which was old resistance, now support. And I showed you that well ahead of time, right? I didn't do it after the fact. I showed you this is live right now as it was coming down. I showed you where I was going to take profit and why. And so I hope that makes sense anyway, just so you get an idea of this whole idea of trading around support, resistance, and confluences. Okay, there's your weekly trade example for the week ending May the 6th of 2011. You guys have a great weekend. I hope you found that useful, and I will be back at the end of next week. All right, have a great weekend and a great week ahead.